Hey traders, Cousin Vinny coming to you from theclosingprint.com with a video covering the indices and possibly a quick watch list for the week ahead. Currently we are watching the tick, which I've been pointing out. So basically what you are looking for here is crossovers. The tick cumulative crossovers give us an indication where the underlying real-time sentiment with institutions is selling, more selling than buying. So you see a dip here and a crossover of the 10 EMA. Now obviously this is a trailing indicator, but for the most part we saw a cross last week when the markets were actually moving higher. So we're concerned about this and think of it in terms of possible selling into strength. Coupling this with the New York Stock Exchange Composite, we can see that we had a nice engulfing candle on Friday, and we're right inside of this volume by price bar. We have yet to come back up and hit this recent high that we saw back in late June and also in late August. So we're looking at this as a lower high currently with the New York high-low moving lower. It looks like it wants to turn, but we are watching this nonetheless. NYSE, the New York Stock Exchange Summation Index, builds upon this bias of the market. And we saw a crossover on the 5 MA and the Summation Index over 2 weeks ago, and we're continuing to move lower. As we're moving lower, the S&P 500, the upper chart, is moving higher, while the New York Stock Exchange advanced declines are moving lower. So we have a divergence in breadth as of last week, so the past 2 weeks. We have to consider that along with the tick cumulative giving us a crossover that we could be seeing some selling into strength. Options X was last week, and typically the week following is a little bit weaker. So we could see profit taking at the end of the quarter, and we'll be looking for what happens as we start the week on Monday. In addition, the risk event indicator, the VIX versus the VXV volatility index, is below 90, so that's a positive for the markets currently. The ARCA Institution Index, XII, is what we watch with regard to what institutions are buying and selling. These are the top 75 stocks that they hold in their core portfolios, listed on the left side of the chart here. But what's most important is Bollinger Bands are expanding, and we pushed outside of the upper Bollinger Band. If you look at the chart closely, you can see that we opened higher and we closed lower, noted by this closing on this bar chart. Stochastics is overbought, MACD is moving pretty much sideways, and RSI looks like it's flattening out. So I would expect the XII to pull in a little bit off the highs this week. Now this is the chart of AGG, the Barclays Aggregate Bond Fund. We are watching this push off of this lower trend line and this volume by price bar area. Note these horizontals are askew a little bit, but you can see the broad bands here. This is the biggest push we've seen in over 25 trading days. Volume-wise, on the buying side, you can note this last push here back in late August. So we're watching what bonds do this week along with TLT. TLT is where we actually saw the first indications of a surge in buying on Friday. Again, you can see the buying here versus 25 days ago, where in mid-August we saw this candle push outside the upper Bollinger Band. The difference is now we're pushing off the lower Bollinger Band, and we have a ways to go if momentum continues to stay bullish. If we start to think about sectors and which sectors typically perform when the market is doing well, cyclicals, that's XLY, and we take a look at the ratio between sectors that do well when institutions start to position defensively, XLP, staples, that ratio a lot of times gives you an indication of what is occurring as rotation occurs. When you see this indicator line moving higher, that's indicating staples are outperforming the cyclicals. Currently, we're breaking out of a wedge formation in this ratio, so be aware that staples are outperforming cyclicals currently for the most part. The S&P 500 is the gray shaded area behind. Note MACD as well. Continuing on with the thought process where sectors are rotating, we can use Stock Chart's new feature RRG, relative rotation graphs, which depict the strength relative to each sector rotating around this X and Y axis. Now if we animate this with regard to the sectors that you see here over a 10-week time period, which is what I have as a threshold, we can see what the sectors are doing. Now note that we're moving along here on the top right with the S&P 500. Now I can scrub this backwards in time, and I can change the duration of the tail so it's a little bit easier to read. So we'll go back 4 weeks or a month, and we'll watch these sectors rotate as they strengthen. As well, down towards the bottom here, we can also see the relative percent change in those sectors. So if I move step by step each week, we can see XLK, XLV, and XLE up in the top right quadrant. And watch what happens as we get closer to the current time period. XLE is now the weakening quadrant, bottom right, and we'll see XLY and XLF in the top left improving category or quadrant. And then we can see XLP starting to rise in the red zone there and starting to strengthen. XLB was pretty much going sideways during that time. As you can see, no strength there. XLU, note that it's pulling off the bottom and we're turning up. Now on Friday I mentioned XLE had gone through the weakening stage, hit the bottom area here. It looks like it's going to go into the lagging category and possibly start following these sectors, XLU, XLP, and XLE, along with XLV. A lot of times indicates defensive positioning by institutions. So we want to watch these sectors here, what happens over the next couple of weeks. Now shifting gears again and going back to the indices, note the comp. Last week we saw an engulfing candle on Friday. We tested the highs. We hit the upper Bollinger Band. We are narrow on our Bollinger Bands. Note the 10 EMA is moving sideways. If this turns back down, look for a little weakness in the comp. Note the distribution day on Friday. And also note Option X, by the way. Also note this volume by price bar, which has shown resistance thus far on the comp. The intermediate trend is still up. Note the 50-period moving average is still moving higher. The 200-period as well. So we could, if we see any weakness, we could see us come back down and test the 50-period moving average, as I pointed out last week, in this previous breakout area as a pullback to breakout trade on the comp and the QQQs. Also note MACD is moving lower with prices moving sideways for the most part, and stochastics is nearing overbought. Note that the NDX A50R, the number of NASDAQ stocks trading above their 50-period moving average, is diverging a bit and moving lower as well. We're looking for a buy zone down here, like we saw previously back in August when we had that dip and we took off to the upside soon thereafter. Now, with regard to the Russell, we have the 50-period and the 200-period crossing here. Note the 20 is the midline of the Bollinger Bands. That's pretty much flat. We saw an engulfing candle on Friday that nearly took out the whole week's price action. RSI is moving lower, MACD's moving lower, as well as stochastics. So the Russell looks pretty weak compared to the other indices. We have yet to see that as an indicator that the market is going to turn lower, but it's something to consider nonetheless. The McClellan oscillator, the NYMO, is currently at minus 28.53. We could see this plunge down to the minus 80, minus 90 area like we saw previously if the markets get weak for a signal to go long, coupled with the other things that we watch over the next couple of weeks. If we do see weakness, we could very well turn and all of those indicators about face. So we have to keep that in mind as well. The US dollar has been crazy strong since mid-August when we broke out of this sideways pattern and Bollinger Bands continue to just expand. Note that when the lower Bollinger Band turns up and the upper Bollinger Band continues to move higher, that usually indicates that we could see prices grind higher on whatever vehicle you happen to be looking at, equity or currency. So keep that in mind. We're moving sideways. We had an engulfing candle on Friday. So the US dollar continues to be strong, crazy strong actually, over the last 6 weeks or so. We can't pass on the carry trade if we're going to talk about the dollar. So the thing to watch here on DBV, the PowerShares Currency Harvest Fund, this is an indicator that mirrors the carry trade. What you want to see here is prices moving higher if you're bullish equities and moving lower if you're bearish equities. Note RSI flattened out at 50. We stalled right at the 50-period moving average, and this large volume by price bar right overhead that would offer resistance at that level. So watch MACD, watch stochastics, and watch this indicator. This is typically used together with the tick, cumulative, along with NYMO, and advanced decline, along with a few other indicators for determining the bias will point. Now, price action always trumps indicators, so you have to keep an eye on what the S&P 500 is doing. It continues to move higher, so we'll watch for any changes in the indicators as well as price action this week very closely. So let's look at some scans for the week ahead. I'll post some charts, but let's take a look at a pocket pivot scan. We'll run that. Okay, so we have 102 candidates, which is quite large, but we'll look at that nonetheless. We'll look at the top 30 or so stocks that come up on the scan. We'll sort these by sectors first to see what we have. Technology, staples, materials, industrials. We got pretty much a broad range of things. So let's rank these by performance, and we'll look at them this way. Concur Technologies, technology software. Nice spike in volume. Really not interested in that type of setup. Dresser Rand, energy. Remember, energy looked like it might be moving, that institutions might be buying energy names. So we'll keep that on our watch list. Vertex Pharmaceuticals broke out above this pattern last week. We pointed that out on Thursday or Friday in the blog. Be sure to subscribe to our blog if you don't already at theclosingprint.com. Vasco data security. Security lately has been very important. Obviously, this continues to move higher. Note the pocket pivots. What we want to do is we look for the pocket pivots when we have a nice pattern about to break out. We have nice narrow Bollinger Bands. Obviously, this one's already broken out, but that's what we look for. Narrow Bollinger Bands above the volume by price bars. Pocket pivots indicating institutions falling all over themselves, buying a stock, and MACD and stochastics set up for a move higher. Couple that with IBD data for good stocks, and you have the ingredients of a good trade. A nice pattern there. Microsoft looking good, breaking out to new highs. New CEO, they're changing the way they do things. They bought Minecraft, so they are doing things differently than Ballmer and Mr. Gates had done over the years. Looking pretty good. ACT we talked about when Bollinger Bands were narrow. This one's not so great. Enbridge Energy Partners, Mikey had mentioned that to me over the weekend. That broke out of a nice pattern. Here's another one where you have prices above the volume by price bars. We had a horizontal breakout level, narrow Bollinger Bands. We had pocket pivots show up, and MACD had turned previously, as well as stochastics. Stochastics rotated on Monday last week. Tuesday gave you a good chance and a nice shot here for 4 nice white candles going into Tuesday trading. So if you'd only waited till Wednesday for the breakout on volume, you would have had a nice trade of $3. So this is what we look for in our trades. Be sure to check out the blog later. I will post some more trades. For now, this is Cousin Vinny coming to you from theclosingprint.com. If you're a new trader, come and check us out. There's a number of videos here that help hone your trading strategies and skill set. These 4 top videos here will get you pointed in the right direction. How to use scans to find for better setups, which we were just discussing on that pocket pivot scan, and using stochastics and MACD with Bollinger Bands help you to become a better trader. Okay? I hope this helps. Take care, and we'll talk to you on Monday.